You do not need a massive account to make money in the stock market. In today's video, I'm going to show you how you can sell puts to make a consistent income on a monthly basis. Yo, what's going on, premium chasers? I hope you are having a God blessed day. Today goes out to those of you that have a small portfolio. And I know there's a lot of you on the channel that have those smaller accounts. You only maybe have $1,000 that you're ready to, deploy. Well, I'm going to show you a strategy I think that's really going to interest you on how to actually make your money work for you and not just like tie it up into something sketchy or hypey that's going to only end up losing you money. The strategy you're going to learn today sets you up for success as the casino, not the gambler. I'm actually going to be giving you guys one of my favorite stocks as well that really works for pretty much any portfolio out there as long as you have $1,000. So without further ado, we're going to get started. Also, every single lucky commenter down below is going to get my 5 favorite stocks to run selling puts on. These are all going to be under $20. That fits into pretty much every single person's budget. So if you want that, make sure you just drop a comment. I'll personally respond to you with those 5 under 20 stocks, as well as make sure you hit the like button and the subscribe button. But guys, today we're going to be talking about selling puts on Ford. Okay, listen to me. I know. Let me go through everything. All right, and you guys are going to see the whole strategy. Okay, you could do this strategy on everything. You don't like Ford like me, that's all good. One of the reasons I love doing this on Ford is because we got that juicy dividend of about 7%. The stock is currently trading around $9.63. So for this strategy, you will basically need $1,000 to pull it off. And I'll show you guys one other stock as well towards the end that's a little bit more high risk, but a lot more reward. Okay. And you're going to see how this kind of strategy really mitigates risk, because I'm done chasing hype. I'm done buying options and gambling. I don't know about you, right? But for me, I'm done with all of those things. And I want to make a reliable income, an actual income, not paper gains, right? With my portfolios. So let me try to show you guys the full strategy and how it works, and then I'm going to show you exactly how to set up these trades for yourself. Okay. So whatever brokerage you're using, go over to, I'm going to use Ford for this example, but whatever stock you're wanting to do this on. I'm going to go to the trade options section. We're going to click sell a put. This is how you know you're in the right place, right? We're selling puts here. Now, when you're selling a put, essentially what we're saying is that, hey, I'm willing to buy 100 shares of a stock, but not at the current market value, baby. I'm going to get it at a better price. And you know what? You're going to pay me. You're going to pay me just for saying maybe. Right? So it sounds kind of crazy, but this is the reality, right? So right here, I'm going to select an expiration date on the date that you'd actually have to buy those stocks of 35 days out. I usually like to be 30 to 45 days out. I'll go into all of that here in a second, as well as some technical analysis. So we can see Ford is currently trading around $9.64. And let's say 35 days right now, you're willing to buy it for $9, right? Now, if you say you're willing to buy it for $9, we collect $35 in premium. Let's go take a quick look at what that looks like on our return. And then we'll go into some more like how do you pick, look at the technicals and stuff like that. I'm going to zoom in here, and all my calculators are free inside our Facebook group. Just join. The link is in the description. And then how much money do we have to put on the line? Well, you're saying, right, you're going to buy your shares at $9. Every options contract is 100 shares, so 9 times 100, right, is $900. Easy math, right? Now you could see what is our return on this. A return on our $900, which is the premium divided by the collateral, your $900, right, in a 30-day period is 3.89%, about 4% in a single month. Where is it? Got to get it. I have to hide it from my daughters. They come in here before their naps and they go crazy on this thing. Juice. All right. That's the juice button. Guys, if you don't get excited about 3-4% a month, listen, I'm not the guy for you, right? That was a 35-day expiration. I think we had annualized a 40% return. Now, let's hold our horses here, right? Because we're not get-rich-quick seekers. We want to know all the risks. We want to know everything. Well, number one, always do selling puts strategies and trading in general. I think it goes without saying, do it on stocks you believe in, right? So if you don't like Ford, you don't believe in Ford, you hate Ford, you probably shouldn't trade Ford, right? Common sense. Secondly, right? If Ford drops to 9, you're going to have to, your $900 will be taken from your account. You're going to be given 100 shares. Okay. If it stays above $9, right? Let's say it's still trading around $9.64, you will, right? Your options contract will expire worthless, right? And you will simply get your collateral back, and then you could run the play again. and collect another 4%. But this time, right, you already collected that premium. You're collecting this $35 up front. So next month when you start, you're going to have $935. And this is the snowball, baby. It's really, really awesome, right? And there's more to this as well as you kind of educate yourself on this, right? Now, here's the big risk that everybody talks about when selling puts, right? The risk that everyone says is, hey, what if the stock drops to $1? What if it drops to $2? What if Ford goes bankrupt? Well, you're going to have to buy it for $900. And I think you get hit with a fee too, just because the company went bankrupt as well. It's like not a lot, but it's like $10 or whatever it is, which is funny. But you're going to have to buy those shares at $9. Okay. That's why I always say this strategy and any trading in general, right? You want to make sure that you're doing this on stocks you love. For me, I don't think Ford's going to go bankrupt. I don't think it's going to go to $5. I think it's going to pretty much stay sideways. Now, how do we know? Let's kind of look at all the technicals and how we do things. Well, first thing we're going to look at is the Greeks, right? I'm going to open up this contract right here. And this is the most important one that us option sellers want to pay attention to. And that's the delta. You can see a delta here is a 0.31. Basically, that means is that there's a 31% chance that you're going to have to buy Ford at $9, and there's a 70% chance that Ford stays above $9 and your options contract expires. Worthless. You shouldn't fear assignment, right? The more you want to get assigned, right, the higher up you should go with your strike price. Like if you genuinely want Ford at $964 and you know what, I'll take it at $950. I want a little bit better of a deal, right? You'll actually collect $54 here, right? You'll collect $54. Look at that, what that does to your actual return. It jumps to 6% in a single month on your money, right? Now, if we look at that $950, it's a 42% chance of getting assigned and having to buy those shares. And it's about a 60% chance of it expiring worthless. So the delta is a kind of like a good measure. Again, it's all fugazi though, guys. Like, let's be real. Nobody knows what the stock market's going to do. If the past month has told us anything, everything's a headline away. But this selling puts allows us to dollar cost average into stocks even at better prices, plus get paid just for saying maybe. I love getting paid for saying maybe. I don't know about you, right? But I do, right? So let's talk about entry and exit points, right? Because I think this is important. We're going to do some basic technical analysis now. Now, again, Greeks, technical analysis that I'm going to show you, it's all BS, or don't let anybody tell you others, but it helps us create a thesis and a reason why we do certain things in the stock market. The last thing you want to do is be an uneducated investor that just goes out there, watches my YouTube video, somebody else's YouTube video, and just like goes and does it. Like, no, that's called being uneducated, and that is not you, right? I believe God sent you to this video for some reason, and it is my duty to educate you on that, okay? Do not blindly follow. You are not a sheep, okay? You found this video for a reason. You obviously want to create some sort of income for yourself, but to create income for yourself, it's not just about clicking buttons mindlessly, all right? It's about doing things and having a reason why. When you have a reason why, you will get, maybe sometimes you will get assigned, which is fine. You should want to own the stock at a better price anyway, but that's besides the point. But if you do things and have a reason for the way you trade, you will have a lot more success in your portfolio. Okay. Can't stress this enough. Being a trader, right? And I don't even consider us day traders by any stretch of the imagination. We don't trade a lot. You can see this is like one trade that you'll do. And even if you close it out early, you're not trading a lot, right? This is why I love selling options and doing the quad option strategy, because it fits into my lifestyle. Get my trades in, right? Spend like a couple hours a week, but like if that, and I just go and enjoy the rest of my life. And that's why I wanted to start this channel to begin with, right? So let's go over to Ford and we'll go to the chart. I'm just using Yahoo Finance here. I think that is really all you need, especially if you're a beginner. Now we're going to add a couple indicators in here. Okay. We could see this is adds a chart here. The first one we're going to add is the RSI. Okay. Leave everything default and add that indicator on, right? What you're going to see is this little bar gets added to the bottom here. Now, the RSI basically tells you how overbought or oversold something is. Okay. Listen, as I explain this to my daughters and my son once he's born and they get older, I'm actually the second my son is born, I'm going to start teaching him about this immediately, like right out of the womb, just right there as I'm holding him. I'm going to be telling him about the RSI, the Bollinger Bands, how to sell options, all that good stuff. So here's what the RSI is, right? The RSI tells you, right? And this is exactly how I'm going to speak to him, is the RSI tells you how overbought or oversold a stock is. Try to hold it straight. Listen, guys, I have to have fun with this. Otherwise, I'm not going to do it. And I really really enjoy talking about this stuff, but I like to have fun here and go on random tangents. Okay. So the RSI tells you how overbought or oversold something is. So exactly how I'll explain it to a child, right? If a whole bunch of people are buying something, right? Like Pokemon cards, right? For example, right? Everybody's flooding to buy the Pokemon cards. They're sitting out front of Targets and Toys R Us, if those still exist, and GameStops, and they want to buy their Pokemon cards, right? What does that do to the value of Pokemon cards? Right? Everybody wants it. You can't even get them in stores, right? You're going somewhere else to buy. What does that do to the Pokemon cards, right? When there's not enough of supply, right? But the demand is drastically higher. Goes up. Right? Goes up. So when our RSI is trending towards that 60, 70, 80 mark, right? That tells us that the stock is heavily overbought. Everybody's piling into it. Good news, right? We're going to the moon, right? Like everybody's pouring into the stock. Maybe fantastic earnings report, whatever it might be. They're pouring into it, right? That is being overbought. Tons of people are buying. Now, what's the flip side? Right? Let's say everybody's selling off their stocks, right? They don't want it no more, right? Earnings suck. This company doesn't work anymore. It's terrible. It's awful. Well, that's when the RSI starts going down towards zero, right? 20, 30, 40, 20, 10, right? Now, what are the sweet spots? Well, we'll get into that in a second, what those sweet spots are. But you could see Ford here is at 50. Ford is a great stock for the quad option strategy because for the most part, there's not massive swings in Ford, right? It kind of always is like, yeah, it has some jumps and downs, but for the most part, like if we look at it, let's just take a look over the past 5 years, like it's not really done much. Like, yeah, it's kind of shot up here over 25. It came back down to reality. And really for the past couple of years, it's kind of just been not really doing much, right? It's just kind of sitting around there, right? So, now, let's add one other indicator now that you understand what RSIs are. Now we're going to add Bollinger Bands, right? And you could just search for it if you don't see it, BOLL, Bollinger Bands. From here, put 30. Don't ask why. We're going to explain that in a second. Now this overlay is going to get added to your chart, okay? The middle that we said 30, right? That's just talking about that middle Bollinger Band. I like to put 30 there because that number, 974, tells me what the 30-day moving average is of the stock, okay? That tells me what the 30-day moving average is of the stock. Now, what we want to do is try, I hate saying timing the market because there's never a perfect time, but there are good setups to be watching out for, okay? When we are trading towards the top of this Bollinger Band, you could see we used to often retract back down. And we sometimes blow past the bottom and then we retract back up. Now, it doesn't always happen. Everything is always constantly changing. Nobody knows what's going to happen. But, for example, when Ford, a couple weeks ago was down here at like 860, if you looked at your selling puts there, your premiums would have been a lot better because when the stock is crashing and trading below at its bottom Bollinger Band and crashing even down below it, that means it's low on the RSI. That means people are pouring out of it. So the premiums of people, essentially what we're doing as option sellers and selling puts is we're selling insurance essentially to people to protect their shares because they're options buyers, right, that are paying us, right? So we're able to then, like for example, right here on this Ford options chain, right, we're looking at like the 9s or the 9.5s, right? Well, guess what? If we did it and actually paid attention to the setups earlier in the month when it was 870 and sold our puts there, we would have been able to sell puts at like 8 and collected like $90 for a contract. Because again, the market's saying, hey, Ford sucks. It's terrible. It's awful. Get out of it. Those are the best times to sell your puts. When we're trading, like right here, trading towards the bottom Bollinger Band, right here, you could see Ford now is going towards its middle Bollinger Band area. What does that mean? Well, the middle Bollinger Band is kind of like the middle, right? The RSI is kind of at the middle. Is it a bad time to sell puts? If you like the stock, never's a bad time to sell puts. I'll be honest, honestly, rule of thumb. But the best time is usually when the stock is plummeting down. This is where emotional control comes in. Do you actually believe in the stock? Right? Because a lot of you don't. You only like the stock when it's going up. But then when some bad news comes out about it, you're like, I hate that stock. I'm getting out of this, right? And then you become the meme of buying high and selling low. What I love about selling options is it forced me to focus on income. It forces me to focus on actually income generating activities of selling puts at prices I want, get paid, and then exiting those with the cover calls. We're not talking about that video right now, but there is content on this channel talking about the flip side of it, on how to sell stocks at prices that you choose, and that is called a covered call. Don't forget, guys, drop a comment down below for my 5 favorite stocks to sell puts on that are all budget friendly. Every single person that comments, likes, and subscribe to the channel will be getting a copy of that. Also, if you're somebody that wants to join our 1-year incubator program, this is a very, very small group of people that we work one-on-one on, so you can learn how to build a option selling portfolio for yourself that can produce income for you on a monthly or weekly basis, depending on your risk tolerance. That link will be down below in the description of today's video, as well as in the pinned comment. So make sure to check that out. Guys, remember, sell options, collect premiums, repeat. I will see y'all tomorrow.